Hello everyone, how is your day going? In today's presentation, I will discuss how to fix and repair a bad credit score. I will explain what a credit score is, the ranges of credit scores in Canada, the impacts of having a bad credit score, and finally, how to fix a bad credit score. Before we get started, a quick reminder to please subscribe to my YouTube channel. Also, like and share my videos to your friends and family members so that they can also benefit from the financial education that we are sharing together. What is a credit score? Simply put, a credit score is what the financial institutions or the lenders use to predict the probability that you will default on a credit facility. What is the chance, for example, that Lucky in the future will not pay off the credit facility, for example, a credit card, a car loan, or a mortgage to that lender? That is what a credit score is. The higher your credit score, the lower the probability that you will default on the payment of the interest and the principal on a loan. In Canada, the range of credit score is usually from 300 being the lowest to 900 being the highest. So we have excellent, very good, good, fair, and poor. Our goal is to achieve an excellent credit score, which we assure lenders or financial institutions that we will be able to pay our loans. Now, what are the factors that negatively impact a credit score? So, what can bring your credit score down? The first factor, and it's a common one, is credit inquiry. Simply put, this is a credit check where you authorize a lender or a financial institution, so you give them permission to do a check or an inquiry on your credit to know whether your credit is excellent, very good, good, fair, or bad. So this helps them to either approve or decline that credit application. There are two types. The first one is called a soft credit inquiry or a soft credit check. A soft credit check is general in nature. It is usually not attached to a particular loan application. For example, a landlord or your landlord may want to check your credit just to know the kind of person you are in terms of finance, obviously, to know whether you'll be able to pay the rent. Or an employer may want to do a check on you when they are considering you for positions like a cashier, an accountant, or any kind of job that has to do with trust. One thing to know about a soft credit check is that it does not affect your credit score. The second type is what is called a hard inquiry or a hard credit check. This kind of check is usually tied to a loan application and will definitely affect your credit score. So it will usually bring down your credit score. If you are given a choice of whether to do a sub-check on your credit or a hard one, then I will recommend that you choose a sub-credit check because this does not affect your credit score. But where you do not have that choice, then the lender will just have to do a hard credit check. Next, mispayment. So we are talking about factors that negatively affect your credit score. So we talked about inquiries. The next one is mispayments, late payments, no payment. Sometimes people just ignore to pay, or sometimes they actually don't have the ability to pay. Sometimes they could forget. So no payment. The next one is what is called credit utilization. And I will explain this because sometimes it gets confusing. Credit utilization simply means the percentage of how much you have used in a given credit limit. It sounds confusing. I'll give you an example. Say you have a credit limit, a credit card, for example, of a limit of $1,000. If at the time you are supposed to pay your balance, you have used $100, your credit utilization rate will be 100 divided by 1,000, which means your credit utilization rate is 10%. If you have used $200, your credit utilization rate will be $200 divided by 1,000, which is your limit, and that will be 20%. For every credit card you have, for example, I usually will recommend that you do not go beyond 30% credit utilization rate. Because if you do that, that can bring down your credit score. Applying for too many cards in a short period of time. Of course, this will reduce your credit score because the banks will do inquiries and you may also run into debts that you cannot pay. The next one is using credit facilities to purchase things that you cannot afford. This will lead to late payment, no payment, or mispayment. So this can bring down your credit. And finally, we have something called public record. So things that are available, information that are available to the public. For example, you've declared bankruptcy. For example, the balance on any credit facility has gone into collection. This will be public information, and of course, the credit bureau will be aware of this and they will reduce your credit score. So now let's talk about the impact of having a bad credit. So now I have a bad credit. Why should I care? The first and the most significant impact is that lenders will run away from you. They will not approve you for new credit. Also, if by chance you are approved for a credit, you will be given a higher interest rate compared to other customers because the risk of default is higher. Next, some kind of jobs will require credit inquiries. And if your employer your potential employer does a credit check and your credit is not good, you may not get that job. Next, utility companies. Usually we want to do a credit check just to gauge your ability to pay your bills. And if your credit score is low, there's a chance that you will not be approved. And where you are approved, you will be asked to put down a security deposit. Some insurance companies as well may not want to give you insurance. So you have that car, but it's just difficult for you to get a car insurance, for example. And where you are able to obtain insurance or purchase insurance, you will do that at a very high premium. And finally, some landlords, usually we ask for a credit report, or they may want to actually do one themselves. And if they do a credit check on you and they find out that your credit score is low, then there is the tendency that you will not be able to pay your rent, and so you will not be offered that beautiful accommodation that you have always sought to have. I know life happens. I know that sometimes in the course of our lives, we will run into financial difficulties, and therefore we may have bad credit. If this happens, how do we fix it? So let's spend some time on this. So the first way to improve your credit score is to make sure you pay your bills, your credit facilities on time. Make payments on time. And where in some cases you are not able to make your payment in full and on time, ensure that you make at least the minimum payment. And that minimum payment must also be on time. So there are two things here. It is not enough to pay. You must always make sure you pay on time. In fact, I usually recommend that you do set up an automatic payment plan so that on due date or before the due date of any of your credit facility, then the money comes straight away from your checking account. You can also set a reminder for yourself on your phone or track your payment dates manually. However you want to do it, just make sure that payment is made on time. Next, you can sit down and negotiate with your financial institution. Say you are owing a bank or any financial institution, for example, $1,000. Book an appointment with them and negotiate with them. What if I pay you at once $700 or $800? Can you write off the balance? Once that deal is signed, then pay off that debt and ensure that that financial institution reports the payment to the credit bureau. And that will be taken away from your credit report, which will help to improve your credit score. Same with other balances that you have. Don't ignore them. Don't wish that they will just go away. You have to try to make payment. Pay them off, and that will improve your credit score. Next, ensure that you check your credit report to make sure the information on your credit report is correct. And you could do this for free. I discussed this in my previous videos. Ask your bank, ask any of your financial institution how you can check your credit report for free. Why should I care to check my credit report? There could be a collection on your credit history which does not belong to you. There may be even a current loan which does not belong to you. Fraud may have happened on your account. All this will reduce your credit score. If you are able to dispute any of these balances that do not belong to you, then your credit score will increase. So check at least once a month. Check your credit report. Next, reduce the number of credit applications that you make. If you do not need a credit facility, don't go trying just to know how good your credit score is. You could do, like I said before, a free credit check. Do a soft credit check. It's free. It does not affect your credit score. You don't have to go to a bank and pretend that you need a loan, because if they do a hard check on you, it will reduce your credit score. Next, avoid high interest accounts. I'm talking about going to that furniture store, for example, to buy furniture with the intention of paying in 2 or 3 years' time, or getting that TV with the intention of paying 2 or 3 years' time, just because the interest rate that they promise is 0. Usually, once that 2 or 3 years comes, then the actual interest rate, which is usually high, maybe 25%, 30%, will be triggered off. And if you are not able to pay, in most cases, they send that debt to collection, which automatically will reduce your credit score. And banks also don't like such consumer loans. So once you have those consumer loans, then your credit score will be reduced. And finally, if your credit score is very bad, what I usually recommend is that you go get a secured credit card. What this does for you is to help you to continue building your credit score while you deal with other balances that you are owing. You go to a bank, for example, and just tell them that you want them to help you to rebuild your credit, and ask them that you have maybe like $500 or $1,000, and you ask for a secured credit card. With that credit card, you can restart and rebuild your credit. I know that it's difficult to rebuild a bad credit. It takes discipline, it takes planning, and it takes effort to eliminate any debt. And it also takes patience. Nobody will do this for you. You have to do it. Not your financial institution, not any lender, and not even those credit repair companies. You have to be positive and believe that it can be done. I've seen it done many times. People in the past have improved their credit score. You can also do the same. Congratulations in advance as you aim to achieve a good or even an excellent credit score. We have to stop here for now, but before we go, a quick reminder to subscribe to my YouTube channel if you have not already done so. Also like and share my videos to your family and friends so that they can also benefit from the financial education that we are sharing together. Also, I'd like to request that if you have topics that you want me to discuss in my next presentation or any presentation, please leave those suggested topics in the comment section. Until my next presentation, I want to say thank you, merci beaucoup, and bye for now.